The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host. As always,
the following takes place between 2 p.m. and 3 p.m.
And we're up almost 31 points on the S&P cash, 2670.18 last tick I see. Dow's up 264, the Nasdaq's up 124, and the Russell's up 9. Now yesterday, I had a rather deep discussion about just looking on the bright side of life. Maybe that was a subtle clue that we were close to a low. I told you that I was going along and bought positions, and yeah, they're doing well. I got an option position that's really kicking some hind end, at least for the first 24 hours that I have it. So we'll continue to monitor that. But you know what? Markets don't go straight up. They don't go straight down. And as I said yesterday, I don't think we can get and afford to get married to the end of the world or, blue skies forever. I always loved that song from James Taylor about him being in the loony bin. I've seen fire and I've seen rain. You know, back then there was lithium. That was about it for bipolar. But, the market's kind of always bipolar. It's always things are bad getting worse or good getting better. There's not a lot of in between for market participants. But if you got half of them on one side, half on the other, the market's not going that far. But a lot of times people just kind of give up, and that's the end of it. And the market pops back to where it was going anyway. We talked about this over the last week. The market maybe went down a little bit lower than I thought, but gave me an excellent opportunity yesterday to buy some fallen angels and not believe the hysteria of the end of the world people. On the internet, they put EOWT, end of the world, because there's always people selling that. But you know what? Markets go up, markets go down. What we didn't have yesterday was the kind of volume anywhere in the first 4.5 hours that would drive the market to hold those lows. In fact, we ended up around, 7 billion shares or so on the CBOE total volume when we were down there with 12 billion shares not too long ago in February. So can a market stay down with lighter volume? It can. It just doesn't much at the scales that we're looking at. So, and what else do we have? Well, we'll talk about a great deal more, but I'm not going to be James Taylor and sing fire and I've seen rain. The market actually, or at least the option market makers, are just thinking we go back up and park around 2,700 for a while. Now, we're getting into fund buying. And one of the great reasons to buy on Wednesday was we had Monday and Tuesday and even yesterday morning kind of as options roll over. We saw everybody and their dog in option market makers selling puts till the cows came home. I guess they come home at night. Anyway, it was a good opportunity. When everybody is throwing out the baby with the bathwater, always a good time to step in. Now, does that mean we're going right back up to the top? I don't think so. The way that this market acts, it wants to consolidate around this 2,700 level. So could we spin the entire part around and through maybe May 18th? Just going a little higher and a little lower, a little higher than a little lower? I think we could. And the market's kind of acting like that. It doesn't like lower, doesn't like higher. Could we go into the dreaded doldrums that we've seen from time to time? Certainly an opportunity. But we'll talk about this and more. But you know what? I'm going to take my positions. I'm going to take some money. I think we took some. I had a good trade in the Tech Insider this week, one in cybersecurity, and I'll bet you that if I let people call in with a big prize for the rest of the week, if they didn't know the stock already from reading my newsletter, they would have never brought it up or will bring it up. But we made, and I think we got into it for 20 and got out for 25 and change. So what are you going to do with that? Well, you know, in a market that's going sideways, I'm feeling pretty good. I'm living right, and the trading gods are with me, which is the most important thing. So anyway, we're up higher, probably going to 2,700. We've got Monday, Tuesday, and Wednesday for fun buying, starting to creep in now. Earlier in the week, I talked to John in Philadelphia. We were having a small conversation about something, and I said, you know what? There's a lot of IPOs that had been kind of laying around that were being pushed out this week, and I was pretty sure by Wednesday close that we'd look fairly good for the market. They generally don't push out stocks if they know they're going to get a mouthful of shoe or foot in their mouth over the deal and have to cancel it. It's fairly expensive to launch these things, and it's the way that not market makers, but the big men of the street make the most out of their money. It's almost free money. It's almost a license to steal, but you have to watch them. Of course, their job is to push out paper. And Wednesday, was it Wednesday or Tuesday? When I sold my cybersecurity position, it was because one thing. Not because I thought it was going down so much or instantly, but because they were pumping it, i.e. the underwriters, and made me think, hey, these guys might be trying to sell into the pop. Because guess what? They were underwriters, and they were initiating a much higher price in the stock. I think you can't go wrong basically doing the opposite of what the big men of Wall Street tell you to do. And I did that this week. Yesterday, the end of the world was nigh, and now it's nigh the end of the world. Anyway, when we come back, we're going to do a little bit of history. We're going to talk about some of the best stocks that came out. And I have to say, as far as actionable news in the last 24 hours, there's probably been more of it than any time this year. I mean, there's been like one or two stories, and they've been big stories. But the story that we have today is a lot of earnings, and 3/4 of them were very good. Some of them excellent, and some turnaround stories that we'll get to today. Give me a call at 877-927-6648. Email me at path@tfnn.com, and we'll get to your questions in the den in this next segment and in the email, which are already rolling in at a record pace. Be back in a minute.
Stage right.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And guess what? I was trying to do something during the during the break and ran out of time, but I think I got it done here. So I will post it in the den. Yeah, I got it here, which is all the earnings, at least current pricing out here, that came out. And I mean, it's I got 44 that I'm looking at. Let's do some history and then get into some charts.
Then it's all just a little bit of history repeating.
It is nothing but history repeating and rhyming. But on this day in 1986, the worst nuclear accident to date occurs at Chernobyl nuclear plant near Kiev, Ukraine. The full toll from this disaster is still being tallied, but experts believe that thousands of people died and as many as 70,000 suffered severe poisoning. In addition, a large area of the land may not be livable for as much as 150 years. The 18-mile radius around Chernobyl has been a home to almost 150,000 people who had to be permanently relocated. And of course, what happened to this? Poor training and your basic Soviet kind of bureaucracy, probably say it best way. If anybody was smart, including people here in the United States, they'd run their nuclear program like France does. Basically, you go to work for the Navy. You get to work on a nuclear submarine. You get trained incredibly well. After you spend about 10 years on subs, you go to work for the nuclear power plant on land. You get paid extremely well. They get tested on simulators like pilots do. Now, there is one big problem with nuclear power, and that is that all the chemistry, basically because it was so expensive to come up with, was just taken directly out of the bomb program. And probably not a good model to do so. Certainly, there are better reactors coming out. But, of course, if I was the president, I should be, shouldn't I? Or just the king, I would spend pretty much a great deal of all our money on coming up with fusion instead of fission. And so solve our power problems for forever. I probably wouldn't do it as one big Manhattan project because it's a cost is issued. But you know what? I'd probably get 20 or 30 people, different teams together, and all kind of just go at it like an X Prize to come up with the best solution for getting fusion in our time. Not fission. Fusion. Mr. Fusion. Like we had. Anyway, on this day in 1986, we shook our fist at God, and he shook it back, mostly because there were a bunch of people that shouldn't have been there, and probably weren't there because, or were there because of bureaucracy and socialism. A bad mix, if there ever was one. I was talking to somebody earlier. In fact, I was listening to a show, I think it was on Monday morning, with Larry Pesavento, and we were talking about something, and he was basically talking about poker. There's an old saying in poker, think long, think wrong, and it reminded me that I hadn't done some of the work that I needed to do every year to get my head right. There's a book called Thinking Fast and Slow. I recommend it highly. It has very little to do with the stock market, but it has a lot to do with how people make their decisions. So, and basically this thesis is System 1 is a fast, instinctive, and emotional. System 2 is slower, more deliberate, and more logical. Each one has its own biases. And I'll just give you a taste of it. This gentleman won a Nobel Prize in 2002, I think, or 2003, that wrote the book. But one of the errors that they came up with, they wanted to look at how people were making decisions and using statistics and looking at the world and coming up with the wrong answer in both instinctive and deliberate ways. But one of the biases, I was just listening to it again in the car today when I went out for lunch. Mr. Diablo and Miss Vixen, the trading puppies, decided they had to go to Arby's because at Arby's they get free roast beef if we go through the drive-thru. Anyway, listening to it, a little bit of some of the errors that people had made in the past. One of the more interesting one was they were trying to do a survey of whether or not politicians had more affairs than doctors or lawyers. And, you know, they came up with some very interesting ideas, i.e. these, you know, basically lawyers and doctors are in town, so probably a little harder to do. You're a little farther away as a politician from the missus who may be still staying at home in a state far away. A lot of women. So it makes sense that maybe politicians have more affairs. But wait, that's kind of the quick, instinctive idea. The one that's slower, takes more mental power is the press going to report about your local doctor having an affair? Are you going to just see affairs reported a great deal because they're senators and congressmen? So what's the truth there? Well, it is and does take more deliberate thought. But from, you know, thinking quickly and the errors you get then, let's say you're trading on a 5-minute chart, you don't have that time. You're going to think quickly. There are biases in both of those ways of thinking. And probably, I think it was the top book in 2012 or 2013, maybe 2011. But if you just go to Amazon, Thinking Fast and Slow, I try to get to it at least once a year and work out why I have biases in the stock market and in my life too. Everybody has them. The idea is to know about them and just handle it. Anyway, Thinking Fast and Slow, a great book about the way things go. And we posted that in the den a little bit earlier. So let's start talking about stocks in general, or actually in specific, don't we? Oop, did I just close that? I think I did. Where is that? Let's get that back up. There we go. Why is that? Oh, I didn't have it up. That is why. Oh, no. Nuclear. Oh. Okay. So hopefully we got these things up. Let's go ahead and bring the chart's up. Of course, the big winner, I have to say today, has got to be CMG. We're going to have to give it just a little bit of a toast for finally coming back to life. And yeah, it's just higher and higher, like the market. So when we look at these, oh, we're going to a break here. When we come back to talk about this, but this is when I talk about a stock coming down in a long time, and you get these long sideways kind of moves. This is what you're kind of looking for. Would I have bought it? Probably not, but I wouldn't have been shorted going into this. Be back in a minute.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And yeah, just getting a note here from Tommy O'Brien. We're setting up a webinar for the 16th. Yes, I sent you 2 emails this morning, and they're both the same. So anyway, going to be doing a webinar on options positions. So look forward to that. That'll be on the 16th of next month. We're doing it on that date so we can try looking at options positions for that Friday's expiration, which is kind of the expiration play. We're also going to be talking about in that webinar the swing trade like we have on from yesterday. So we'll be talking about medium term options, i.e., out 30 days, and trading options in the last couple of days before expiration, and how to set those trades up, where to get the information, and how I do it. So basically, you'll be able to follow me through some of the ones that I'm looking at. Okay, first thing anyway, Chipotle up. When you see a stock that does this, which is just goes sideways, it's one of two things. Either you're getting a lot of distribution or you're getting a lot of accumulation. And I couldn't say that the stock was ready to go up there now, but off of 700, half the price it was at its highs, probably not the time to be diving in on that hand grenade and going short. I see a lot of people always betting on the end of the world, even for stocks like Chipotle, whatever it is. I've never been. I've driven by. Always crowded with too many yuppies and no, they don't even call them yuppies now. What do they call them? I'll think of it. But anyway, up strongly, blows away all those. And again, you just always want to watch these stocks that get far too pessimistic. And as Mark Twain said, when everybody gets kind of pessimistic, it's time to step back and maybe take stock, because you're probably on the wrong side of the boat. Okay, now questions coming in about various stocks. So we're going to go through all of them. GDX. I don't understand trying to trade GDX. I was talking to, was it one of my subscribers? Can't remember now. Too many things going on. But anyway, we're talking about these big triangle patterns in the stock market. I've never done well trying to predict the breakout side of these markets that are in bigger triangles. We went long, what was it, December 10th in gold, and rode it up into what, February something, and it just wasn't going to do anything more. I didn't make a lot of money. Could have if I just traded the instant part of it. I thought it was going to be the part of a longer version of the market, but it broke and didn't do it, i.e., I thought it was in the last wave of a move higher that could last a year, year and a half. You got about 6-8 weeks into it, and it failed. And it didn't look like the market was going lower, and it didn't look like the market's going higher. I just figured that I'd be chopped to bits if I continued trading gold. I don't see any change from February. You got a little bit more low into the $20.84 low of February 9th on the GDX, but I just don't see it. Secondly, if I was going to go long, I'd probably go long the metal. I don't like the miners here for a variety of reasons. But like I said, I'd much rather be in the metal if everything hits the fan than these stocks where they're going to have problems for a variety of reasons. And of course, now you got the dollar making you want to holler at 91.38. Looks like it's going to go to 92. Every time it does that, looks like people in the Treasury kind of go nuts. And maybe they go nuts in the next day or so, and you get a move down. Maybe gold goes a little higher. But you got to look at, what was it, 1990 to 2000 and a half or something, where gold did nothing but go sideways. It has that history. I'm going to wait until I get some kind of big signal like we had in December to go long or short gold. I just think it's too easy to get chopped up in a position in gold right now. I would say hands off the miners and wait till you get a giant, gleaming, undeniable movement in gold that says this thing's either going much higher or going much lower. I just don't understand. There are a lot of things out there to trade, And I'm a specialist in technology. I've had to sit back 3 months when I couldn't see a move in technology, or 6 months when I couldn't see a good move in technology coming out of the market. I may not always be wrong, but generally when I say the market's going sideways, may be the best calls that I make. And right now, I don't see anything that gets you out of this area of just going sideways in these gold miners. And like I said, I would much rather wait and fade the move of a big move out of these sideways markets than actually try to bet I'm going to get the trend right off. So no touchy for me. And if I absolutely had a gun to my head, I'd only trade the yellow metal itself. And actually, the platinum looks much better. So that would be that part. We got some other questions out here. See if I can get back to them. Did I get them all? I think I got them all in the DIN, the GDX, some other ones. Got some other questions out here. Okay. So the next question is, what are my thoughts on snap calls, SNAP? Is it still heavily shorted? And the answer is yes, but a little less than it was. Right now, the numbers, if you check out Wall Street Journal, you can find the numbers on what the last reporting period was, which is going to be about 2 weeks late. So you're always looking in the rearview mirror with them. And this is actually one of the things I'm going to talk about in my webinar on the 16th of May. And that is how to kind of use a dead reckoning approach after you get these numbers. Because you get the daily numbers, but they don't tell the whole story. So part of what I do in putting these options together, option plays together, and especially trying to fade short squeezes in the market, not fade, actually ride short squeezes in the market, or try to buy short highs in the market, has to do with looking at the trend in the short float along with the daily information that you get each day from FINRA on how stocks are shorted. But that's going to take a little bit of work. But that's why you get my newsletter, right? So anyway, Snap looks kind of interesting out here. We'll talk a little bit more about this when we get back. We'll talk about Qualcomm. Got a question about that. Got a few more questions too. Oh.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks! Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
The Taz Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the Taz Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the Taz Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the Taz Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Anyway, we're talking about Snap when we looked at here, and the answer is if you look at the bi-monthlies, the short float has gone from about 27% in February to about 22%. So there's still a huge amount of short sellers in Snap. And, you know, you always get that news if you're in a stock that's 16 bucks and it opens at 21. And that's why I'm a big fan of not playing the short side of stocks like this. Now, this thing has a great looking chart. It broke up with huge volume. It came back on light volume. You had kind of a little bit of volume in the downside yesterday. This thing goes. I still like this pattern as we talked about it yesterday. I just want it to get a little bit more into this candle of the 4th with a lighter volume. You got 20 million shares. You're kind of doing it today, but guess what? You got 20 million shares. So again, a lot of these setups, they just take a lot of patience. So that is what I'm looking at. So, man, what else do we have? ABX still looks good. There's a lot of good gold stocks. I just don't choose, you know, when I want these things to break out of the bigger range that they're in before I make a play. There's lots of money to be made in different ways. I just don't, I stick to what I do well, and that is me. I learned a long time ago that a lot of people make money in the stock market in ways that I can't. Okay, so that looks good. We had a question about Qualcomm. We went long Qualcomm. What was it, like 49 bucks yesterday? I wanted it to close above 50 to make my pattern. Didn't get it. A little bit too much volume, so sold it right before the close yesterday. The question is, what's going to happen on this? I like Qualcomm long term. I like the bigger pattern out here between basically 50 bucks and 70 bucks. The question is when to get into this. The earnings weren't a good enough turnaround yesterday and today. But, you know, when 5G comes along, this is a $70 stock. It's all about the timing, and the chart looks good. So maybe it's midsummer now, maybe it's September, but I will be keeping an eye on Qualcomm. Just didn't quite get the close that I wanted to get yesterday. I thought that the stock could easily open at 55 bucks if it got it, but it was a little weak into that close, so we went ahead and sold it. Just means it's probably going to need to come back and look at it at another time. Yeah. What else? Okay, take to it. Okay. Yep, we are going to the moon, as a lot of people in the den are saying. So, nothing new out here. Up 35 points on the S&P cash. But again, that's when everybody jumps on the short side. Just be cautious, because you can get, even if you're in a bear market, you get massive moves to the upside. And that's what you always have to worry about. If you're short, you don't want to be the last man at the party ever. You always want to leave a little bit on the other side for someone to get in and get what your position from you. So anyway, let's see, take a look at something else out here. Got a question about volume today in the markets. We got a lot of volume, but is it going to be that much bigger than yesterday? We got an hour and 15 minutes left. We're doing 4.4 billion shares. I think it's going to be probably 7.5 billion shares today, so a little bit higher. Now we've got a lot of people probably on the wrong side of the market. Earnings tonight and tomorrow, mostly tech tonight. In the morning, we've got most of the stuff that will affect the XLE. And this thing is right at resistance. So I'm not willing to go off on a limb and start a new position on the XLE. You had a pretty good test of that XLE down there on the February 9th low at 64.45. Did so with 35 million shares. Got into it with half the volume. The only thing I didn't get was a test of that 64.45. It's about 50 cents higher. I was hoping for it. We never got it. That's what we were betting on into expiration to move the market up, and we were in other positions. But I thought that that was going to drive the market up through the last expiration cycle. Now we're kind of up here, and we've got probably a little taste of semis coming back, a little taste of technology, and then maybe some energy in the morning. But I wouldn't be adding a new position on here. If I had gone long down here at 64.92, that low, I would have probably taken the money today as it hit this gap from the gap down on the 2nd of February. That gap down on 30 million shares. Right now we got 8 million shares. So, my swing trade would have been that. I would have been out. I wouldn't have been taking the risk to tomorrow morning before the bell. But if you do go long, you're looking for 78.39, which is this high from January 24th. So that would be it. Okay. What else do we have? Got some more emails here. Let's go ahead and look at that. Okay, we talked about snap calls. I'm thinking snap, the way I look at it, may go a little sideways for the next few days. I'm thinking maybe the Wednesday, the week before expiration, that thing's kind of lining up that way. We talked about Qualcomm. I think it's still got a little while to go. It should have bounced today if it was going to get started. Okay, got the webinar. It appears your strategy going long has involved finding stocks retesting past lows. No big secret. We talk about it all the time. Buying breakouts. What are your thoughts about the system, and what do you find more successful? Buying the breakouts, I always have to wait until they pull back to the level of the breakout. It's just that it's a lot harder to actually do those, because a lot of times the volume is ambiguous on the way back on the test. The easiest thing to tell is whether or not a stock tested a previous low or a previous high, both of them, on lighter volume. So to me, the less that I worry, or less that I get involved in on my own biases, are what I'm looking at. And when I look at charts like now, with these two lows in the XLE, it's pretty hard to figure out that my bias has gotten in there to the point of 50%. When I was starting this, I learned a great deal of this. And the number that people used back then in 1999 and 2000 was 10%. If a stock just could test its previous low on 10%, that was a big signal. I think that high-frequency trading and other things have changed that. I look and start for stocks that test around 50%, as much as 60%. But that's kind of what I focus on to set up my trades, and it's the easiest and least susceptible to my own bias. We'll be back after.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools, as well as provide great market calls too. Sign up today.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And we're back. Now we get to earnings after the bell tonight. And, of course, Amazon, Microsoft, Intel, Baidu, U.S. Steel, Western Digital, Starbucks, First Solar, Expedia, Southern Energy, Cypress Semiconductor, Mattel, Vertex Pharmaceuticals, Discover Financial Services, Stryker Corporation, KLA Tencor, Eldorado Gold, Athena Health, Digital Realty Trust, which I'll pay particularly more attention to. New Skin, Anglo Eagle Mines, these are all after the bell. I think these gold ones report a little later. And then, of course, before we get even a chance to do anything on those other than watch them tonight, we get into the energy stocks in the morning. Exxon, Chevron, Dominion Energy, Rockwell Collins, Phillips 66, Colgate, Palmolive, Dover Corporation, Cabot Oil, Dominion Midstream Partners, Charter Communications, Honda, Moody's, Phillips 66, Simon Property Group, which is another one I'll watch fairly closely to see how the malls are doing. Weyerhaeuser, another one in housing to give you an idea. That's kind of it. So, again, probably another big night. Well, it will be another big night. Probably not quite as big as last night. We had a ton of earnings, but still going to be a big night out here. But I'm going to say that we've got about 3/4 of the stocks reporting good news and about 1/4 bad news. And I think, like I said, I'm not expecting to go to 28.50 on this run in the next first week of May. But I certainly think we could get back into the 2,700s for fun buying over the next few days. If the volume then dries out, then maybe we have a setup for a short in May and go away, or sell in May and go away. But right now, I'm just tending to my knitting and looking about 1 week ahead into earnings, and that's about it. In the meantime, sell when you can, not when you have to. And we will see you here tomorrow. Same bat channel, same bat time.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.